Hello, Maverick traders, and welcome out to your weekly currency room. This is Songit here, and I'll be breaking down this week's price action and most importantly, talk about our upcoming week ahead as we approach that tariff deadline or April the 2nd. So let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what happened in the markets, take a look at news, take a look at currency baskets, and then talk about our upcoming week ahead by taking a look at possible setups. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at last week, this was not an exciting week, I would say. Even though we had a lot more movement in the equity markets. As you can see, the equity market sells off again, and we actually reversed. We were sitting at about 2% gains for the week, and then we are ending down with 1.5% loss. So this is, again, a huge swing going from a risk on to a risk off. And again, I'm recording this class before the market closes. So we'll see if the market closes. But again, right now, it's looking like it's going to be an ugly weekly close. Now, in the currency market, I would say that most of the things were kind of range bound. And even the bond market is just range bound. So a lot of consolidation that's taking place. The volatility, intraday volatility definitely has come down as well. So again, remember how we were trading just 3 weeks ago, where there was just a lot of volatility, a lot of movement. We definitely have seen things kind of calm down. And even though markets are getting a sell-off, we're not really seeing that big surge in the currency market. So again, something we'll talk about it when we look at the charts, but that's what we have in front of us. Now, as far as the economic data goes, it was mixed economic reports. Again, so far, we are not really seeing the data showing weakness that would, again, indicate that there's coming recession. So market always move ahead of things, and then the data is always lagging. But so far, we just don't have that data supporting it. So these are the things that are pressing right now, things that will be, again, in focus, especially as we go into the next month where we get more economic data. And I think that is where we're going to start to see some signs of weakness. And if that's the case, then we'll probably see market weakens more. But again, as long as the data stays good, maybe we'll just see a continuation of that back and forth. So that's really what we have in the market so far this week. And here we are with the last week events. Again, let's just take a look at some of the major ones. Again, the PMI numbers, they were kind of mixed, both in the Eurozone and even the US. The CPI numbers that came out of Australia, that they came out of UK, they were below expectation. The PCE price index today we had from the US was slightly above expectation. And in between, you can see the numbers are just, kind of mixed here. One of the things that we're noticing is just projections. We're getting the projection for a growth to really, lag in the coming months ahead. So remember, market is always forward looking. So we're just, these are the numbers that are in the past, but markets are now focusing on what the upcoming numbers are going to be. And that's just going to cause a lot more of a bigger move. So maybe this consolidation phase will break out in the coming month ahead. But yeah, this is where we just don't have a big, strong catalyst. Unless we see a big breakdown of the markets, we perhaps see similar price action what we saw early in this month. We'll probably see that return. But so far, everything's sort of muted right now, waiting for data to roll out and also those tariffs to roll out on April the 2nd. And that's going to cause more movements in the markets. Now, let's just jump into last week review and take a look at the numbers. And so far, you can see it was a pretty a negative week across the board. Now, looking at the S&P, we're down 1.48%. So in the World Stock Index, cryptos are down. And again, look what's up. Gold is up 1.89% to another record highs. And here we are with the oil market, again, up 1.63%. So then again, when you take a look at this chart here, now what you can see is that market, again, had a big fall Market had a big fall from the all-time highs to this new lows, and we got this little bear rally in between. As you can see that the bear rally early in the week, we had a nice little gap up higher and things were looking okay. But then here we are ending the week almost down or closer towards that previous lows here. Now, just from a charting perspective, this is again a very bearish sort of a candle close today. But then more importantly, if you take a look at a weekly chart, now that just looks like an ugly candle on a weekly. So when we look at a weekly chart, we definitely see that we have the markets are more at risk for further downside. So what we're going to be in focus here is this big support level. If this breaks the support level, we'll probably have more downside coming in the markets. If this support level holds, we might just go range bound where we got the support level, we got the resistance level, and we bounce in between. So this is something that we're going to wait till next week where we get a bit more clarity on that chart. I would, at this point, I'm bearish, but at a further break of this one, I will then again be turning a lot more bearish. So that's just really where we are in the markets. There's a lot going on, and I think that's something looking at the charts, we'll get a better idea for the next big move. Now, looking at this price action here for last week, percentage-wise, you can see that it again was not a big percentage week. Remember, like 2-3 weeks ago, we have had movements more than 2%. So that's where we were getting a lot more bigger moves. But here we are, compared to what we saw in the equity markets, we're just not getting that similar kind of move. I mean, take a look at the Aussie. Aussie's actually up for the week, and Kiwi's down for the week. The European currencies continues to outperform there. The CAD did outperform, and then with a risk-off environment, look at the yen. Yen is actually weak, and the dollar is kind of holding steady. So again, you look at this board and you try to put together with that correlation. The correlations were definitely off. So this is where we talk about like trade the bar price action in markets are in front of you. Correlation sometimes is there and sometimes they are absent. And again, this is one of the weeks where things don't really match up. But we're going to continue trading based on the charts. And when things are consolidating, that's where we probably have to wait for the next breakdown. Now, taking a look at the crypto markets, you can see everything is down. Again, I don't really have anything good to say about crypto. I'm not interested in it, not a great environment to be involved in crypto. I think we are more towards flight towards safety rather than flight towards risk here. Now, looking at market analysis, let's just jump right into the charts here. As you can see, the markets again look a lot bearish here. Now, this thing is turned red as well. So we are now at a -2 for the equity markets here. So here we are. I'm looking at -2 here. And if this breaks below that support, this will turn into -3. So if you're looking to get short or still looking short, I think that's really the right call here, unless we find some support at the support area. Now, here's the tricky part. We talk about correlation, and there are times where correlation works perfectly. And then there are times where you start to look around, piece together the information, and it just doesn't really add up. I think that's really where we are. The equity markets are showing way more weakness. But then when I take a look at bond market, especially times like, this, where we could see some potential big moves to the downside, usually the bond yields will actually start to come down. That's what we see. The bond yields start to come down quite aggressively. I'm not really seeing that here. Again, we are seeing a movement down today, but then overall, again, we're not seeing a big sort of a fall happening in the yields. So the yields are holding steady. This is again telling me the underneath the bond markets doesn't seem to be going or as concerned as what we are seeing in the equity markets. And here we are with the crypto markets. You can see just making a low base here. Eventually, when the market takes a big sort of a dip lower, I would expect this to kind of follow the suit. But like I said, this is, crypto is not it kind of works on that positive market sentiment. So this is just not a great environment to be in. I think there's definitely more downside risk if there's a bigger break. Now, looking at the next week, remember, this is the we're closing the month on I think Monday or Tuesday. So we are seeing more activity as we go into the first week of the month. So as we take a look at this numbers, again, we have the RBA rate statement, which they're expecting to hold rate steady. Again, I won't be surprised if they do a surprise cut, to be honest. But at the same time, if they hold it steady, I think the focus and go into the rate statement. Are they hawkish or dovish? Again, I won't be surprised they are more dovish on their outlook. Inflation number came out last week and that was not, it was below expectation. So I think at this point that statement could be dovish. So I would still like to be sort of looking at Aussie to the downside. Now we have some important numbers out of the US, like the ISM manufacturing and services PMI over here. We got the Jules job opening. We have the private employment report. We have the official employment report on Friday. You can see that there's just a whole lot going on all week. So this is where I would expect the volatilities to sort of increase a little bit here. Also adding on the top of that, the April 2nd deadline where we see a broader tariffs go into effect. Now, we'll get more details on that day. And the last month and a half, too, has been a roller coaster where things get put on, things get pushed, things get exempted. It's just not clear. So who knows what's going to get, what kind of exemptions comes through and how does the market take it? So expect some more volatility on a Wednesday on the top of all this news that's going to affect the currencies. So next week is a week where we are going to be on guard. Markets could move substantially either way. At this point, I would say the market likely to stay weak overall. And, if things get worse, we could see a bigger drop like we saw last month. And I think that's where we probably see, bigger movements in a lot of, not just the equity markets, but in the currencies and even bonds, where we see a bigger breakout. Now, if things don't get as worse, we probably go sideways. So again, we'll find out what happened next week. RBA again on Monday night, Tuesday, and then we take a look at all these economic reports. I think there's going to be plenty of opportunity to find some volatility next week. So let's go and take a look at our currency analysis, look at the charts, and score things one by one. I'm going to quickly go through cryptos here as, again, there's not a whole lot to kind of talk about here. Everything from a trend to a velocity are now all aligned to a -3. This is a Bitcoin. You can go to Bitcoin Cash, Ethereum, and here with the Litecoin. They all are looking the same. So at this point, when both the trend and the velocity lines up, I think there's bigger move to be coming to the downside. Now, let's just talk about currencies because this is where charts look a bit interesting. I mean, take a look at this dollar chart. And this dollar chart has been, dollar has been difficult to trade overall, I would say. It's not really catching on to a risk-off theme. It's not really catching on to a risk-on theme. So when we talk about correlation and, something that we were doing past year over here, and it was actually working really well. But then again, the whole month of March, it has been going consolidation. So whenever you see things like that, that's where you have to be a lot more cautious and just wait for confirmation. In this scenario here, I need to see a break either to the above, getting above this 50-day moving average or breaking lower here. Until then, the way to trade this currency is a day by day where, again, you can see that there's not a whole lot of continuity. One day up or one day down. And that's just not the ideal environment or ideal way to trade, especially if you're trading on a higher time frame like a 4-hour chart or even a daily chart, where we need to see a movement that would last you going into 2-3 days. That's just not the environment here. So you can see that the velocity kind of is all over the place as well. So these are the currencies that I try not to figure out as we always want to. Just let the trend tell us which way it wants to go. I know we're getting a sort of a -2 over here, but I think overall, if you just take a look at it, this thing is sideways. So be a little bit cautious on the dollar here. Now, jumping into the yen. So you would think, overall for the entire year so far, if we had the entire month of January, February, and a lot of March, the yen was actually being the best currency. It had a score of a +3. So it was a much easier currency to trade, especially when the markets were falling. Now what we have seen the opposite. As you can see that this thing has come up quite a bit lower, with changing its trend score. But at the same time, when you look at broader markets, you say, hey, markets are actually really weak. Here we are looking for our next big drop in markets, but yen is not showing it. And I think that's really where we're seeing that disconnect. So how do I want to trade this? Well, you can see that today's candle is a little bit more bullish, covering, engulfing its previous candle here. I wouldn't really be, again, I want to be turning or looking at this and this as a sideways range here until we break above this 20-day moving average. And I think that's where the score will get a little bit better. And perhaps we can look for some continuity there. But right now, you can see that we are getting short-term velocity, but that doesn't mean it's going to last you, in the multiple days ahead. Over here, we got this two candle pocket here, one candle over here, another one candle here. So again, I can look at this, look at markets. You can get a day move, but looking for those continuity, I'm not really sure if this is the currency to be long for a safe haven. So clearly dollar is not acting as a safe haven. Yen is sort of acting as a safe haven, but not as much. Let's take a look at Swiss franc. Well, here we are with the Swiss franc. As you can see that this thing is holding steady. It has a trend score +2, but it's not really, shooting higher. Especially on a week like this where we went from a risk on to a risk off, not really seeing that. So if you're looking at this week and say, well, I didn't really were able to catch a move, I mean, there was not a whole lot of move, compared to those correlations. Now, the thing that has actually been declining and I've been watching is the euro. So you can see that, and I've talked about euro, if you look at those long-term charts, this was a big sort of rally. And it got us above that key resistance level, especially if you go in a much higher time frame. As you can see that so far, the pullback have been very shallow. And we take a look at this one. I think this looks like a classical bull pullback to me. We have a massive rally. We got 2 weeks of this consolidation, and it's bouncing right off the support. So this is where, if I have to take a long here, I would be using this level as a stop. And if the currency basket dips below, I'm out. As long as it stays in and it can actually slowly climb higher, I think this is going to set up very nicely for a nice little breakout or a continuation pattern. And remember, as we look at charts, we're not really finding a lot of good looking charts. I think this is the one good looking chart that I can find. Now we go into the British pound. I mean, this thing, you can see that it's not overall, it's going up. It's not having, a lot of good continuity days, one up day, one down day, one down day, one up day. Overall, what you can see is that the buyers are coming in on any pullbacks. That's just the way pound is moving. So I don't like, a pound as much onto the short side. This thing is going to slow grind higher. This is not the one that's moving or exploding higher. It's just like a slow, steady moving higher. So this trend score doesn't change on the pound. It remains one of the strongest currency out there. Now let's take a look at CAD. And I must say CAD has, kind of turned its corner here. Things were looking a lot bleaker here. And even though we haven't really had much good news around the tariffs, we heard about the auto tariffs that's supposed to take place as 25%. It's a bad news for Canada. But so far, I'm not really seeing a lot of that bearishness in the CAD here. So I feel like CAD is kind of going sideways here as well. A lot of the implied volatility, we had a lot of movements, both on the upside and the downside. We got the tariffs got pushed on February 1st. We had a nice move up on the CAD. But right now, I'm not 100% on, buying that little dip here and see if it breaks out higher. At the same time, it's not really falling apart. It's kind of stuck in between this 20 and the 50 moving average. So what I'll be looking for is, which side does it break? Does it break the 50 moving average? And at that point, the score will get a lot more positive. Or does it break below this 20 moving average? And that time, the score will get a lot more bearish. So you can see that this thing is kind of stuck in the middle on those two. Now, looking at the Aussie here, you can see this thing is going sideways as well. Again, we talk about correlation. This thing, it's not really falling apart. It's just going sideways. So until this gets really, this get really breaks below the support. That's where I'll get a lot more bearish on the Aussie, turn that into a much directional trade. But right now, you got to keep this range in place where, right now we're in the kind of middle of the range. We're falling over. If this kind of breaks, let's say next week, this kind of comes down lower and breaks that support, I think that will be a great opportunity to kind of turn a lot more bearish on this one. But on a day like today, where you're seeing the equity markets being weak, I'm happy to see that this thing is rolling over with it. So there's still correlation there with the broader markets there. So the trend and the velocity both heading the same direction. Now let's talk about catalyst. We have the RBA rate statement on Tuesday. Again, let's say if they cut rates, unexpected, this thing is going to crater. It's going to go right below. Even if they come out with their weaker outlook, dovish outlook, I think this definitely is setting up nicely for that news. So I'll be paying close attention to the Aussie rate statement and potentially looking for a bearish setup after that. Now, on the other hand, we have the Kiwi that's kind of going sideways. Again, same thing. Kiwi, I was actually a little bit more optimistic that, maybe we'll see a bit of a break higher, especially when the market had a nice little rally. But you can see that this thing just didn't go anywhere. So really not wanting to go along the Kiwi here is just lacking a lot of the movements here. The volatility remains low, so not really a great looking setup here. So as we've gone through those charts, you can see that it's just, we do have a lot of good looking charts. I think I like euro, pound, Swiss franc is right up against the resistance. So until we can really break that resistance, I will be hesitant to buy that breakout on the Swiss franc. But I think euro actually looking a lot better here. So I'll be taking a look at some euro setups going into next week. On the weakness, we have the Aussie, we have again the dollar and the CAD. This is kind of in the no man's land here. So again, not really liking, even though they're at a -2. Until they break out of that range, I think I'll be very much cautious on, getting the big sort of a breakout here. Now, looking at velocities, you can see things are kind of all over the place. But on a day like today, where the equity markets are falling, we have seen a risk-off sentiment. We are seeing the Aussie Kiwi underperform, and we are seeing the euro and the yen outperform. So it seems like that's really what's acting as a safe haven currency, euro and the yen. Dollar, unfortunately, not acting as a safe haven currency. And I'm surprised that today Swiss franc didn't act as a safe haven currency, but European currency seems to be a better place to be on these risk-off days in the markets. So let's just jump into possible trades ahead and let's take a look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, looking at some possible trades, let's just jump right into the markets first and see how things are looking. So, first thing, like I said, I wanted to kind of point out this weekly chart. I often kind of take a look at those charts, especially for big turns. And as you can see that this thing has been bullish for the most part, for the last couple of years. So, you can see that this thing is now, this is a nasty weak candle here. We've seen some buying coming in off of that, but again, that's not the case. A lot of people who wants to buy the dip is now, likely to get caught off guard here and then perhaps push its market lower as, it doesn't really go up, it actually rolls over. So you can see that on a weekly chart, this is a nasty candle here. Now, looking at the price action for today, you can see it's just a one-way move. We had a sell-off and it just continues to sell off here. So we are quickly approaching this support. Like I said, this is the next line in sand for the next one. This is the This is the range that we're dealing with. As we get closer to the support area, like I said, if I'm not short yet, I'll rather wait for this to really break to give me that confirmation. How things are moving. We are seeing the yen continues to outperform on this risk off, but again, nothing is really exploding here. So, trade accordingly. Trade the things if they're not really lining up as well, or if they're not really giving us a good percentage move, then it's just better to sit out. So one of the things that I'm going to take a look at is some of the European currency pairs, because so far we identified that euro actually is doing well, or chart-wise, it's bouncing off that key level. So let's just take a look at some of the European currencies. So here's the art with the euro kiwi. You can see that this thing is, we are right up against our resistance. We did pull back. I mean, just a little pullback over here, a little pullback here, but they're all sort of reversing higher. So this is the daily chart. You can see we got a nice little pullback off to the 20-day moving average. At this point, the next level of resistance is about 192. I think at this point, it looks like it wants to go retest that level. So nice little bull pullback opportunity. That's a Euro Kiwi, Euro Aussie looking similar. And we take a look at Euro CAD. I mean, Euro CAD had a much deeper pullback, but at the same time, they're all sort of kind of in the same category here. What about, let's take a look at Euro against the USD. Well, one of the things we want to take a look at is this dollar is kind of looking unsure which way it really wants to go. But looking at the setup here, Euro dollar did have a pullback right to the 20-day moving average. At this point, the high is at about 109.50. The low is at about 107.70. At this point, if this continues to gain higher, it can retest that resistance. But like I said, if I really have to pick a trade, best against the worst, I don't really have dollar that's moving substantially higher or lower. So dollar is really more like a neutral currency where perhaps we can take a look at better movements, euro against something else, like the Aussie or even the Kiwi, like they're moving a lot better. Now, outside of that, like what other setups do I like? Well, this is where I would say, it's better to kind of follow the news flow and see what's more relevant, what's moving, because from technical standpoint, I don't really, everything is sort of sideways here. And for this purpose, I will take a look at 4-hour chart. So let's just start with some of these pairs here, pound dollar, dollar CAD, Aussie dollar. I mean, they all are sideways. So this is where, unless you want to trade that range, you can really just have to be on the sideline, wait for these breaks to happen, set up some alerts. So if it does break, I think that's where we see a next move lower. But I'm not really seeing things falling apart here. They are at the support. I mean, Kiwi dollar looks actually interesting here. But at the same time, we can take a look at some of the yen crosses, and they're kind of looking the same as well. Got a nice little rally, and they're all sort of rolling over here. So the key is really to take a look at what currency is moving, what currency is relevant in that environment, and sort of trade that. We see these things change from a day-to-day basis. So right now, with this consolidation in place, on a 4-hour chart, really, this is where you've got to be sitting on the sideline. Wait for the bigger levels to be broken. Now, on the other hand, if you're looking for more intraday opportunities, and I think that's where you take a look at a velocity, perhaps maybe you can take a look at velocity on even an hourly chart and take a look at trend on a 4-hour chart. You have to really shorten that time frame to really capture that move. But on a longer term time frame, things are just sideways. So until they break out, we want to be kind of staying on the sideline. So just to sum it up here, again, we'll be taking a look at tariffs deadline for April 2nd. That takes effect the midnight. So April 1st, midnight, April 2nd. And one of the things we'll be taking a look at is any retaliatory efforts. Remember, that's what caused volatility as we start to see a back and forth taking place. But at the same time, if there's exemptions and, that's a good news for the markets, we might see some sort of reversals as well. So it could get worse or it could get better. I mean, we'll see what happens. Based on implied volatility in the currency market, I'm not really seeing markets are, markets are like moving as much in anticipation for it. So it'll be interesting to see how they react to it. And is that what's holding back some of the movements, So take a look at those ranges we looked at on a 4-hour chart and, set up some alerts and see which way we'll break first. Again, focus on relative strength weakness. And again, this week is important for news events. So I think we'll probably see more of the movements, better opportunities around those news events as well. So I'll be looking to be active around that and make sure you are using proper position management. You're doing your proper trade management. And as I always say, if you're not liking the market condition, stay out. That's the best thing I can recommend. When things are sideways, especially, it becomes a challenging task because you want to be involved, you want to be taking part of those moves. But if the moves are not there, it's just better to sit out and let the chart tell us when they're breaking out. And I think that will be worthwhile to jump on. So think about that risk to reward trade. Thanks for joining here. Enjoy your weekend coming ahead and give yourself a reset. And we'll be back next week with our usual schedule. Thanks for everyone. Take care. Till then, bye-bye.